Looks good there. Okay, I'm David Frame, a trainer with the Association of Townships. I'd like to talk now about transfers in CTAS. Transfer has a special connotation in CTAS. We talk about moving money between places, checking to savings, savings to checking, out to other investments. But in CTAS, we have a function called transfer, which is moving money from one fund to another. And the two funds that everybody has is the general fund and road and bridge. So I'll use those primarily as the examples. There's a state statute that a town board by unanimous vote may transfer a surplus beyond the needs of the current year in a town fund to any other town fund to supply a deficiency. That's the movement of money. And again, I'm going to use the example of Fund 100, the general fund, to Fund 201, the road and bridge fund. And in that state statute, it talks about the deficiencies. So it implies that you can only transfer to a fund if a fund is going to run out of money during the year. And a unanimous vote by the town board. So if the clerk or the treasurer or somebody on the board thinks that a fund such as road and bridge is going to run out of money, the board then must make a motion and second and approve that with a unanimous vote to make that transfer. A transfer is both a disbursement and a receipt. You're going to disperse money out of the general fund in this case, and you will receipt it into the road and bridge fund. But before you start that process, I strongly suggest that you print a Schedule 1 and you do a database backup. And I didn't mention that in the earlier presentation, but it's a good idea to do it before you start anything new. If you haven't done transfers, if you haven't done investments, if you haven't done indebtedness, print your Schedule 1, maybe your cash control, and do a database backup. So if you mess things up, you've got a place to go back to. On the top line in CTAS, you go to reports, financial reports, do your statement, your Schedule 1. And I'm starting here showing that I have 0 transfers in and 0 transfers out in my Schedule 1. So we're going to transfer money out of the general fund. That'd be a disbursement out of the general fund. So you go to accounting, disbursements, and add a disbursement. Again, you've got the regular disbursement, blue-headed boxes to put information into. You have to put something into the description field, the pay to the order of, check date, and check number. The check number that you will put in, this is recommended by the Office of the State Auditor. You use TRF and the date, 8-digit date. I tend to make my dates year, month, day, rather than month, day, year. I think in the long run, they sort better if you need to sort those when you're doing a list of disbursements or receipts. The date of the check and pay to the order of your township, whatever your township is. I will put in my township, it could be Eureka Township. Under description, you're going to transfer money from road and bridge, or to road and bridge from general. And it's helpful to put in the date of the meeting minutes. If you have an outside auditor come in, one of the things they're going to look at is transfers, and they're going to go back to the meeting minutes and see if that transfer was approved by the board. So this makes it a lot easier to do that. The next slide is, okay, there. Under the account distribution for this disbursement, put in the fund number of the fund the money is leaving, and there's a specific account number to be used and a specific account code for transfers. Transfer to a governmental fund, you're going to transfer it out of the general fund, you're going to transfer it to another governmental fund, account number 49360, and object code 720. The fact that you're using those account numbers does things in CTAS. Then you will go to accounting receipts, and you will create a receipt. The receipt number, put in the same number that you used for your check number on your disbursement. TRF and the date, receipt date, deposit ID date could be the same, and received from, put in your township name there. Canon description, transfer money to the road and bridge from the general fund in the meeting minutes that was approved at. A little closer look at that account distribution line. Fund number 201 Road and Bridge that you're going to receipt it into. A special account number 39203, transfer from a government fund. And I'm doing an amount of $5,000 just to make numbers easy. Now we go to accounting and cash. A very common place to go. You would do it at month end, looking at deposits and outstanding checks. We do it here because we have a receipt and a disbursement that are hanging out there now. You get the split screen like you've seen before, cleared deposits. You have the deposit in transit, the $5,000, which you then move from the left side to the right side. And then you save and close that screen. Then you go to the outstanding checks section. And there you've got your transfer, the vendor. It's on the left side. You move it to the right side and you do a save and a close. Now, if we go to reports, financial reports to Schedule 1, here's our transfer on the Schedule 1. So it shows the transfer out of the general fund and the transfer into Road and Bridge. Now that doesn't physically change what's in your checking account or your investment balance, other than it moves that money strictly here in CTAS. Questions on transfers? Let's see here. If I go up to here, as clerk, I've never used the cash screen or outstanding check screen you spoke about. Is this wrong? Using that screen and that process is the proper way to move checks from outstanding checks to cleared checks and to move deposits in transit into cleared deposits. You should not be using the little square checkbox on the disbursements or receipts screens. They can cause hangups in CTAS. You do not actually print a paper check when you do a transfer. You're not going through the claims process. You're doing it in receipts and disbursements. And let's see if there's, I want to close that one and go over here to chat. See what we've got in chat. Did you say a person may only transfer from one account to another when an account is running out of money? That's what state statute implies when they say that you can only transfer when you transfer into a fund when you have a deficiency in that fund and a surplus in the other fund. The account numbers on the receipt are the same as account numbers on the disbursement. It's TRF and the date. And the date shown in the CTAS training manual is 2 digits for the month, 2 digits for the day, and 4 digits for the year. And I tend to turn those around and put the 4 digits for the year first, and then the 2 for the month, and the 2 for the day. What if a fund is no longer being used or needed? I would say certainly then it would be appropriate to move those funds into some other, move that money into some other fund. It could go to the general fund because the general fund can be used to pay for anything. Just be sure you take that through the board so that you have approval from the board. And the motion by the board should include the funds, the fund numbers, and the amount to be transferred. Is it necessary to transfer money to a negative account if you know we'll be receiving money to make the account positive soon? No, there's no requirement to get rid of a negative balance on your cash control or your Schedule 1. General practice is to, I know there are some funds that you're going to incur expenses and you know the money's coming in later. Don't worry about the negative then. Okay, let's see. I think we're caught up. Let me go back over here. Let's see. How should we handle moving ARPA funds from general to a new fund? You do a transfer, as I just went through, using the TRF and the dates as your check number and receipt number. And general accounting numbers. The account number and object codes are in the CTAS chart of accounts, and the descriptions are there for transfers. There's a CTAS step-by-step training. I've been mustering through 3 years and still confused on much of it. Complete training on CTAS will be helpful. Yes, Laurie is working on not putting the class together, but getting it scheduled and locations. We've held 2 of those so far this year, and they were well attended. Was there an object code on the disbursement for transfer? Yes, 720 is an object code on that. Why to actually pay a road and bridge bill out of the general fund instead of doing the transfer? That's certainly another way to do it. A quick look, generally people will look at the reports for road and bridge fund to see how much you've spent in road and bridge. They're looking for Fund 201 right away. Everything is there. It makes it easier. If you have an account code for grading, as an example, and you paid some of it out of road and bridge and some of it out of general fund, a little harder for somebody with a cursory look at the records to see how much you've spent on grading. Can we deal with ARPA grant money by transferring funds from the COVID fund to road fund instead of doing CTAS disbursements with account codes to spend that money? Let's see, I gotta read that closer here. By transferring funds from the COVID fund to the road fund. I recommend spending it directly out of your ARPA fund. I think you have a better path, a better trail of the money that it's then ARPA money that you're spending to do your road work. That's probably the exception. I just talked about spending it out of the general fund. If you're spending out of the ARPA fund, the real emphasis here is being able to account for your ARPA funds. You can use road and bridge account codes and object codes, but make the disbursement straight out of your ARPA fund. Let's see here. Please show a transfer from investment to checking account. That will be in the slides. That'll be posted under the heading of investments that was done earlier today. Are we caught up here then? Looks like we're caught up on this. Let's see, anything down here. Can you move money to a new fund? Yes, you could move money to a new fund. If you're creating a new fund for something, you could transfer money from the general fund to a new fund. You may be creating maybe a second fire district fund, and you have not had that before. You could move money from your general fund to the new fire district fund to pay your bills out of the fire district fund. Let's see. That looks like it's complete there. So now I want to go to the other part of it. Okay, how do I get out of here? So if I stop, okay, Kristen, I want to go from this slide presentation to the other slide presentation. Do I have to go through stop share to get there? Guess that's what I'm going to do. If I go from here, back down here, indebtedness, go to there, and up to here. Okay, welcome to CTAS indebtedness. Minnesota Statute 475.
It's not up on the screen yet.
Not up on the screen.
Oh,
Okay.
now screen sharing.
Go back. Let's see here. I go to help. There it is. I go to here. Did you get there now?
Nope.
Nope, not screen sharing yet. Let me go back to here. Go back to here. Screen share. Click on that one. Then that one. Screen. Okay, then I gotta go down here and click share again.
Yeah. All right.
Okay, then let me go up here. There.
Yep.
I got there now. Okay. I need a class on how to do a class. Okay, CTAS indebtedness. State statute says towns are authorized to incur debt. There are particularly fund numbers for debt, and we'll go through some CTAS entries for debt. I'm going to pause on the CTAS part for just a minute. During the earlier presentation on investments, I talked about statement of positions at the office, the state auditor's office. There is one there on borrowing and debt for towns. It generally says the authority of the town to incur indebtedness is granted by statute. It requires a resolution by the board that you're going to borrow money. In many cases, it also requires the approval of the electors. Short-term borrowing is not as simple as going to a local bank and requesting a loan or filling out their standard forms. So if you're going to borrow money, you need to have a conversation with your legal counsel, with your county attorney, or not county attorney, with your township attorney. And you'll have a conversation about what you want to borrow it for. And are you going to go with bonds or loans or things like that? They'll be able to help you through the intricacies of getting it done properly. Townships will borrow or bond to acquire funds to do a significant project like a road rebuild. This money is often put into an investment until it's needed to pay for the construction cost. A separate fund and fund number is recommended for the proceeds of the bond, and we'll actually cover the specific numbers as we go through this. The second part of this is the work to pay back the bonds. Now, earlier this morning, we covered the investments. So we covered some of the creating an investment to put that bond money into. And then today this session will spend more time on paying back those bonds. Special fund numbers. We talked earlier about investments. Here's the fund numbers for the capital projects in the 400 series. 401 is for general capital projects. You can create fund numbers 406, 407, 408 for your capital projects. Into that capital project, you would put the proceeds of the bond. And then you would also create a fund in the 300 series for servicing those bonds, for paying those bonds back. You create a fund with the debt service fund number, such as 302. Into that fund, you place the money levied to pay off the bond, the assessments collected to pay off the bond, and any transfer of any money left in the related 400 account, 400 fund. Remember, we just looked at 400 fund is where you put the bond money, and then you pay out of that 400 fund for your construction costs. If you have any money left in that fund, it should then be transfer to the debt service fund, a 300 fund, and the remainder would be used to pay off your bonds or pay off your debt. In the top tabs in CTAS, you have a tab for indebtedness, and a pinkish icon shows up for a debt. You click on that. You get kind of a standard screen, only this one says debt list and add new debt. There's a couple of debts already shown here. We'll add a new debt. Again, you have the typical blue text with the blue asterisk, means you have to fill those in. Indebtedness ID, that would be something that would relate directly to the account that the bond numbers or something like that, so you can trace that back and forth. Description, what is it being used for? What's the bond? Many places will put in, let's see, I might have one here. Description, plow truck bond. Indebtedness A3, issue amount, the issue date. If you go up to the top right, other long-term debt, if you click on that down arrow, you'll get a drop down of the types of debt you could incur. And you select the appropriate debt out of that list. And if you're looking at this screen, then you can see towards the bottom part of it, you have a payment history, payment date, amount. And in gray, there's a total principal paid and remaining balance. Those are great because they will be calculated automatically by CTAS from your issue amount and your payment history. So I've created A3 plow truck bond, $10,000. I put in an interest rate, an issue date, and a final maturity. Here's a debt list. Now we're going to make a payment on this debt. So we will select Edit. So we selected the A1 debt. The description is the plow truck loan. This one was for $25,000. We're going to make a payment. The current interest rate, you'll notice, is in gray. That's in for just information purposes. CTAS does not calculate the interest rate or the dollar. It shows the interest rate, but does not calculate the actual dollar amounts of interest to be paid. You have to go back to your debt instruments to see that. There's a close-up of that. We're going to go to claims now because we're going to make a payment. Accounting, claims, add a claim. Claim number will be your standard pre-populated claim number. Claim date, you're going to pay to the order of. for this payment, we selected Bank 1. In description, we put an A1 plow truck loan payment. It's a plow truck, so we've got it in Road and Bridge. There are specific account numbers and object codes for disbursement of payments on debt. 47120 is debt principal, and 47220 is interest. Object codes, there's one for the principal payment, 602, and then 601 is for the interest payment. You put in the amounts of those two, and then there's a drop down for debt. If you click on the little blue arrow, it will show a list of the debts that you have outstanding, so you can then select it. That way, it will match up and put this payment into that debt payment history. Continue on with your claims. There you can see, again, the account distribution, the 47120 and 220 for principal and interest, the 602 and 612 for principal and interest object codes. Using the correct account numbers and object codes means that all this information, the payments, get carried into the debt module and onto the reports and into the state report properly. Here's a little closer view of that drop-down detail to the right that shows which outstanding debts you have. We selected the plow truck loan of A1. Now we go to accounting disbursements list. You can now see the check there, 54321. The claim number, it's going to go to Bank 1. The description is there and the check total is there. This check would then be, go through your claims list for approval, become a disbursement, becomes a check, which you can then mail to the bank. We go back to the indebtedness module and the debt report. We'll select that debt A1, the plow truck loan. Look here, and now you can see that that payment history now includes our payment of $200 on the principal. The indebtedness module does not track your interest payments. This is just for recording the principal payments. You can see the total principal paid was $200. The remaining balance is $24,800. We'll touch on the reports. Go to reports. You'll get a pink icon way off to the right. We have indebtedness activity and a Schedule 6 statement of indebtedness. Shows your types of indebtedness, general obligation bonds, tax increment bonds. At the bottom is other long-term debt. That's where the plow truck loan and bonds are. There's a close-up of the bottom section of that showing those two. Shows a $25,000 debt and a $200 payment for outstanding balance of $24,800. Here's the statement of indebtedness. Shows much the same information, a little different format. This shows outstanding on January 1st, paid through the year, and then what would be left outstanding at the end of the year. And Q&A, we'll go up to Q&A here first. Is this the indebtedness report that the county office asked me for near to year end? Yes, it is. They're looking for that Schedule 8. Over to the chat. Let me go to the top of this first. Okay, not too far. What's the difference between long-term and short-term debt? Long-term debt is usually something over 1 year. You could take out a bridge loan or a small loan. That's going to get you from now through June when you get your next tax settlement payment. That would be a short-term debt. We just purchased a road grader and took out a loan. Can I just pay from the road and bridge fund? Do I have to create an indebtedness in CTAS? CTAS has the indebtedness module in it for a reason, and that's so that your debt shows up on your state reports properly. And when the county asks for an indebtedness report, you will report to them on that Schedule 8 the true status of your debt. Where is interest accrued? Interest, because you use the proper account number and object code, when you're paying things, you'll be able to find that interest in your reports. And I would have to go back and look at the chart of accounts and look at the form, but I know there's a line in there that talks about interest paid. And interest accrued is, we don't really accrue interest on loans. I guess you could, if you're making payments once or twice a year on a loan, you could accrue monthly interest. You'd have to do that to the side. CTAS does not have a function for doing that. If I go back out of here, go back over here. What about when buying a piece of equipment and we have the funds and don't have any debt with the purchase? You do not have to create anything in the indebtedness module or investment module to do that. You could use the 201 fund if you have the money in the road and bridge account or road and bridge fund. There are account numbers and object codes for capital purchases. You look in there. Difference between a bond and a loan. I don't know that I could give you a succinct definition. Bonds are generally for larger amounts. If you're going to bond for something, those are certificates that are generally sold through investment places so that the public or other financial institutions can buy. A loan is generally with a local lending institution, a bank, or a credit union. I don't see anything new in chat or anything there. So I am done if no other questions pop up.